Mike gets stronger and stronger as they try to attack him. But what about the rest of us? Can we survive Biden inflation? Listen to a man who, well, he's a bigwig, a real Wall Street bigwig. He's Jamie Dimon, and on Bloomberg, he had this to say.
A harder recession is possible. I think there's a good chance that inflation will come down, but not enough by the fourth quarter. The Fed may actually have to do more. And I think a lot of things that have happened in the world, think of the bigger trends, are inflationary. Infrastructure spending, the IRA Act, lessening trade with certain parts of the world, bringing trade back into America. Those things are all, the green transition is going to take a lot of capital. So all those things kind of have inflationary attributes.
That's Jamie Dimon, who is getting more and more outspoken. He's a billionaire investor, chairman, CEO of J.P. Morgan. He's the big guy. What is it going to mean for the rest of us? How do we deal with this inflation? Well, let's turn to the man we trust from that amazing organization, KeyCity Capital. It's our buddy, Ty Lasater. Mr. Lasater, welcome back to America First.
Dr. Gorka, it's great speaking with you as always. How are you?
I am. Well, look, I'm good in terms of reconnecting with you, but I'm worried about what inflation is going to do for the millions of people listening to this show. So we've got that headline from J.P. Morgan's Jamie Dimon. We've got another one from CNBC. This isn't, some radical conservative outlet. Consumer debt, Ty, has hit a record of 16.9 trillion with increases in delinquencies as well. So if you want some security, if you want some safety, what can people like KeyCity do for you?
Well, yeah, I mean, I think there's a false sense in the market right now. You've got consumers who, by and large, were not around in the early 80s the last time we saw inflation at the rate that it is. And so what people need to be focused on right now is putting their capital, putting their money to work for them as hard as they are working for their dollar. And that's one of the things that we do. Obviously, we invest in cash flowing real estate. I
love this phrase. So I learned this from you. Cash flowing real estate. So what you're talking about is not being a landlord, but it's real estate. It's not risky like the stock market. So explain how this works, because if you want to get into this, you don't have to be a landlord, correct?
Well, correct somewhat. You're still being a landlord, but you don't have to deal with that call at 2 a.m. when the toilet does.
Right. When there's flooding in the basement, it's not your problem.
That's right. That's my problem. That's why we do what we do. I got started, 15 years ago building a portfolio, and I got to the point that I'd utilized the capital that I had and started bringing in other people to come in and partner alongside us. And you realize that economies of scale give you opportunities that by yourself you don't otherwise have. And I always like to say, I would rather have 10% of a watermelon than 100% of a grape because you diversify. You diversify that way, you pull together resources, and when you pull together resources, you find economies of scale. And part of the resources is you invest alongside us, and you don't have to take that phone call. We do it for you. But yeah, cash flow is important. Just think about it. The value of a dollar is declining every day at a rampant rate, and so if all you're doing is working for your dollars, you're turning around and spending those dollars as inflation goes up. So you've got to start pairing that alongside cash flowing investments that deliver cash flow to you. Unlike what we used to think about was the key to retirement is building a 401k with conservative slow growth mutual funds. Well, the value of the dollar declines so fast that the growth of a mutual fund doesn't grow fast enough to cover what you're going to need when you retire. And so you need investments that both grow in value, but they also produce cash flow without having to sell the investment itself.
And more people are having to rent, which only makes this kind of investment more attractive, correct?
Correct. That's what happens when you see inflation. I think in the article that you were talking about consumer debt, it was talking about mortgage debt.
Yes.
And the drastic increase, I think it's gone up, $1.3 trillion from a year ago. And with that, you're going to see more and more people in a market like this move out of their mortgage and go to A nice place to live, safe, secure place to live, but doesn't have the risk of having an AC go out and that be their responsibility on top of the mortgage, which is breathing down their throat in an inflationary market. So what you see is typically the rentership market goes from 65% of the U.S. to about 70 to 72% of the U.S., depending on where you get your information from. And so it's a huge opportunity for us right now.
All right, guys, you need to find out more right now. I'm sold on this. Why? People always need somewhere to live. So go right now to keycitycapital.com/Gorka or call Ty Lasater's amazing team. He's the CEO. The number is 817-912-1569. That number again, 817-912-1569, or go right now to keycitycapital.com/GORKA. Get yourself a little bit of security in these very, very disturbing times. Thank you, Ty Lasater, keycitycapital.com/Gorka.
The airing of this interview by America First, Sebastian Gorka, and Salem Media is not an endorsement or recommendation by America First, Sebastian Gorka, and Salem Media of the products or services discussed in the interview. America First, Sebastian Gorka, and Salem Media do not guarantee the results of any investments a listener or viewer makes to this program.